And then the bond market finally got a win on Tuesday, the 25th. The appointment of a new prime minister in the United Kingdom kicked off an active European trading session. MBS were up 73 basis points on the open. We also got a lot of home data. We got the FHFA Home Prices Index, which came in at minus 0.7 month over month, still up 11.9% year over year, which is a little bit slower than the 13.9% annual rate last time around. Case-Shiller came in down 1.3% month over month versus being down 0.7% the previous month, still up 13% year over year, which is very healthy, though it is a deceleration from the 16% it showed previously on a year over year basis. Profit and losses aren't usually thought of as a consideration for central banks, but the rapidly mounting rating at the Federal Reserve has many peers wondering if that is going to turn into a consideration. The bond market is enduring its worst sell-off in a generation, triggered by high inflation and aggressive interest rate hikes. Falling bond prices in turn mean that there are tons of paper losses on the gigantic amount of bonds being held by the Federal Reserve. Rate hikes also involve central banks paying out more interest on the reserves. Commercial banks park with them. It's tipped into heavy operating losses for the Fed, so that could come into consideration. The UK Treasury is already preparing to make up for a loss at the Bank of England. Consumer confidence retreated in October as well after advancing in August and September. The present situation index fell sharply, suggesting economic growth slowed to start the quarter four. Consumer expectations regarding the short-term outlook remain dismal. The October Purchasing Managers Index declined from 49.5 to 47.3, below the estimate of 50. 50 is the midpoint between expansion and contraction, so it has moved into the traction area, which is probably good because we need to see that in order to get rid of this inflation. We also got a 2-year Treasury auction, which came in at 4.46 versus 4.447 expectation. The bid to cover came in at 2.59 versus a 2.57 average. Strong demand, but higher yields. Bonds are already coming off the best levels of the day. They seen just before the noon hour. The weaker auction gave short-term bonds a bit of a push, which is going to make it even more inverted. At the end of the day, we were up 77 basis points on the day, landing at 98.52 on the 5.5, which has us in the top end of that very wide range, which is bordered by a ceiling at 99.031 and a floor of 96.984. We also got a post from our sponsor at WellThatMakesSense.com. This is from our series on the book Persuasion by Robert Cialdini, genius at persuasion, and all the things that go with influencing people. This is about the front loading of attention. So persuasion practices create windows of opportunity that are far from propped open permanently. So this is how you can create the environment to be more persuasive before you actually try to influence people. So check it out on WellThatMakesSense.com.